Good day. I'm Chris Willis, Global Technology Analyst with Melville, and today I'm going to be talking to you about semiconductors. The breakout of AI in 2023 really happened in a very rapid and in big way. In 2022, the unveiling of ChatGPT to the world really illustrated the power of this awesome technology. And with that, investor interest was centered on who the winners would be from the AI revolution. And no one sector has benefited more than semiconductors. They are the hardware that is driving the super fast computers that make AI and other technologies like it possible. And without some of the recent advances in the semiconductor technology, none of that would be possible. Semiconductors are often called the picks and shovels of all technology. And it's really semiconductors that are driving the future of AI and the future of computing. When we talk about semiconductors, what we mean are integrated circuits or microchips. These are the processes that we put into computers, into data centers, and into devices like our mobile phones. And it's the semiconductor that makes them do what we need them to do. They drive every modern technology that we have, from advanced sciences like autonomous driving and gene therapy to more modern conveniences like Spotify and Netflix. None of these would be possible without semiconductors, and they're essential to the global economy. Semiconductors today are a global industry and used in a wide range of products, from smartphones to computers, to cars, and to medical devices. And as the world becomes increasingly digitized, the demand for semiconductors is expected to continue to grow. The semiconductor industry has experienced remarkable growth over the last 20 and 30 years. And it's one of the most important industries in the world. Chips themselves are one of the most traded commodities globally. And it's the $600 billion industry that makes it the third most widely traded product in the world, trailing only behind crude oil and refined petroleum products. The industry has had a strong long-term global growth presence, and the outlook going forward is positive, with Gartner expecting the industry to grow at a compound average growth rate of 8.5% from 2022 to 2028. This growth will be driven by increasing demand for semiconductors across a wide range of applications. Looking back at the history of semiconductors, it becomes evident that this isn't a new technology, but one that has advanced rapidly over time. The very first semiconductor device was developed as far back as 1874, but it wasn't until 1947 when at Bell Labs, the first modern semiconductor was introduced. But as I said, it's the advancements in more recent times that's really made the applications of semiconductors truly exciting. We believe that the industry presents an attractive investment opportunity as it has matured. This means that the firms today are more profitable and less cyclical than they have been in the past. And while it's matured, it still offers fantastic growth. The potential use cases are expanding, and the economy is becoming increasingly more digitized. If we look at examples of where we find chips, they really are everywhere. Something as simple as making an espresso cannot happen without the use of a dozen or so semiconductors. But as our technological ambitions grow, the density of semiconductors has grown exponentially. Deloitte Consulting estimates that by 2030, half of the cost of a motor vehicle will be software and hardware electronics, up from only about 10% today. That's truly remarkable if you consider that the value of a car itself is quite a high value item, and it creates this enormous market opportunity for just the technology aspect of that. Some of us will remember that during COVID, we had shortages of some electronic goods and of vehicles themselves. And a lot of that shortage was caused by disruptions in the semiconductor supply chain. Vehicles were being produced and still rolling off of production lines, but they couldn't end up being shipped to dealerships because of the shortages of chips. This resulted in production lines needing to be stopped and ultimately a shortage of new cars. And this drove motor vehicle and transport inflation ultimately. So chips and semiconductors really are essential to and are driving the growth of our economy. The technology behind the semiconductor manufacturing process has become exponentially more complex over the last 2 decades. The steps involved today to manufacture a chip number in the thousands, and the number of role players across the ecosystem of semiconductors numbers also in the hundreds and stretches across the world. The materials and the components are sourced from multiple jurisdictions, and the semiconductor process, the process of manufacturing a semiconductor will do a round trip across the world almost twice before finally ending up in a product that's in the hands of a consumer. The capital investments required to go into a semiconductor manufacturing plant are enormous. Around $200 billion a year is spent on building fabrication plants for semiconductors. And these are not small niche labs. These are absolutely enormous facilities, some of them as big as football stadiums, 5 stories tall, covering the area of 5 or 6 football pitches themselves. And the entire plant is kept in a clean lab environment, meaning that the air inside these plants is 10,000 times cleaner than the air we breathe, and is as clean as the air that you would find inside an operating theater in a hospital. All this just to manufacture some of the most advanced chips that we require for our everyday lives. These chips themselves are incredibly complex. They're about the size of a fingernail and have up to 100 billion transistors etched onto them by lasers, essentially. And at that scale, the transistors, measured in nanometers, that's 1/1,000,000th of a millimeter, are being built up on the chip almost atom by atom, one layer at a time. All of this complexity and capital is increasing, and there are very few firms that can keep up with the pace of all the technological advance. This is crowding out new entrants. It's entrenching the position of those already in the industry. And for the winners in the game, as long as they keep investing billions into R&D, they'll likely stay ahead of any would-be competitors. This crowding out has already benefited the industry and resulted in favorable industry dynamics. 30 or 40 years ago, there would have been hundreds and potentially even thousands of competitors across the ecosystem. It really was a cutthroat industry. Today, the industry has matured and a few remain across the supply chain, each owning a very specialized niche in that value chain. Every single process, every component, all the machinery that goes into manufacturing a semiconductor, the software that the design firms use to program the systems that actually, go and design those chips, all of that is being done by one or maybe 2 companies that have completely dominated a niche. And these firms have grown their market shares. And as they've done that, they've achieved pricing power over their customers. This is a far cry from 20 or 30 years ago, when you had the hundreds of competitors who were, many were loss making and willing to give their products away to their customers just to try and hold on to some market share. But as the tables turned and the industry has matured, it's resulted in very favorable financial returns for those that have made it. This chart illustrates the number of major semiconductor companies who have managed to grow their earnings per share above 15% for more than 10 years. Looking forward, we see no reason for demand to slow down. In the past, the growth drivers were the personal computing revolution, which lasted through the 1980s and the 1990s, to the dawn of smartphones, which from the introduction of the iPhone in 2006 has driven an enormous adoption of semiconductors across the world. And that will continue to be a trend as our smartphones become even more essential and indispensable to us, and as more people around the world and in the developing world are able to access smartphones. And then one of the most important factors has been the digitization of everything. As I explained earlier, simple processes, something as basic as making a cup of coffee, has become a digitized process for us. In the future, growth will come from the shift to accelerated computing. This is a complete retooling of our existing data center infrastructure. This means that the $1 trillion of data centers that have been built over the last 10 years, much of that is going to need to be completely replaced with accelerated computers. These are computers that are able to process data and information at speeds and rates much faster than what we are currently able to do. In addition to this, the ongoing growth in wireless telecommunications will be driven by the adoption of 5G and then looking forward to the adoption of 6G around the world. And one of the more interesting and exciting sectors that we expect a lot of growth to come from is the automotive sector. This is expected to triple by 2030 as the adoption of electric vehicles and autonomous driving becomes more commonplace. The growth of semis has, in the past, had three main drivers, and today these remain true. They are circular in that better technology improves productivity and unleashes economic growth, which in turn drives the demand for more technology. So within Melville Douglas, we've looked at the semiconductor universe, and there are two companies that we've decided we really like, and we now own them in our portfolios. The first is Taiwan Semiconductor. The company was created in 1987 to serve chip designers in order for them to be able to focus on designing the best chips they could. This left TSMC to focus on the manufacturing of chips. What TSMC realized was that the technology had gotten to a point that no one company could be a master at both of these crafts of designing and in manufacturing the chips. And at the time, the most dominant chip company in the world, Intel, was doing both of those things. This has led to TSMC today overtaking Intel and becoming the world's most important semiconductor manufacturer. They've become a leader in several integrated circuit manufacturing processes, meaning their revenue streams are less volatile than most other manufacturers, as they're constantly developing the next generation of chips, and there will always be demand for those new chips as technology companies like Apple and Microsoft would want to adopt the latest chips for their products or for their data centers. The margins and profitability of TSMC reflect the positive outcomes of their technology leadership and that portfolio diversification. The growth is being driven by digitization of everything, higher chip contents in all electronic appliances, 5G becoming more prevalent across the world, and in the high performance computing or accelerated computing becoming more prevalent. Geographically, it's exposed. Most of its plants are located in Taiwan. This exposes TSMC to some geopolitical risk from China, but given the enormous importance of this company to not only the West, but also to China, who is a large partner of TSMC, and that something like 20% of TSMC's products are exported to China, we don't see this being a risk that will become something that we should be concerned about in the near future. Often, TSMC has been referred to as the most important company in the world. That's because it sits squarely at the center of the global semiconductor value chain. And this is not an accident. When it was founded, TSMC's founders decided that they needed to partner rather than compete against anyone else in the industry. And so they went about creating their business by working with their suppliers, who would be the key equipment and material suppliers, and also working with their customers, who are the chip designers like NVIDIA, Apple, or AMD, and said that we needed to bring the industry together to be able to continue to advance Moore's law, the law that says that the speed of chips will increase by a rate of 100% every 2 years. In order to keep shrinking chips and keeping up with Moore's law, all the partners in the value chain would need to work together. And today, what's resulted in is an industry that's almost entirely centered around TSMC, with them sitting at the middle of this entire technology stack. they've firmly embedded themselves in the value chain by collaborating with their customers and their suppliers. Today, TSMC supplies about 92% of all advanced chips and manufactures almost all of the chips for the world's biggest chip designers like AMD, NVIDIA, Qualcomm, and Apple. And they've even begun to manufacture chips for some of their competitors like Intel. Intel, having fallen behind in the last 10 years at the leading edge, the most advanced chips we know we haven't been able to keep up with TSMC and their rapid pace of technological development. And that means that the Intel design labs have had to outsource the manufacturing of those chips to TSMC just to be able to keep up with AMD. And in the chart on the right, we can see that over the last 10 or 12 or over the last 15 years, TSMC has come to completely dominate the leading edge. And Intel's presence is almost non-existent, while Samsung has taken some market share from them. Another company that we really like and that we now own in the Melville Douglas Global Equity Fund is NVIDIA. NVIDIA is the world's dominant GPU company, and it's been at the forefront of the AI revolution. The addressable market for NVIDIA has only been expanding, and the use case for accelerated computing is also expanding. GPUs, which were essentially invented by NVIDIA and the reason for its creation in the 1990s, are perfectly suited to accelerated computing. This sets up a very long runway for growth as traditional data centers are being replaced. At its founding, NVIDIA created the GPU, the graphics processing unit, so that it could be used to advance computer graphics mostly for the gaming industry in a process that they call parallel computing. That means that as a chip receives the instructions to process a command, it's converted into multiple streams into those parallel processes, and those streams work all at the same time to solve a single problem. And today that means that in the most advanced NVIDIA GPUs, these are being split into millions of processes at the same time. This results in processing times that far exceed that of traditional CPUs. And as big data and computer science advance, being able to process that information quicker is incredibly important. But the use cases for GPUs are broad. Autonomous vehicles, and virtual reality are also creating runway for growth beyond gaming and data center. These processes also require millions of inputs per minute or per second to be fed into the computer and need to be processed instantaneously with zero margin for error. NVIDIA has a superior product. This is evidenced by their growth and their dominance in GPUs. NVIDIA itself has about a 10-year head start against any other competitors in the industry in designing and in designing leading GPUs. They have pretty much tied up most of the industry by having combined their software packages with their hardware, and in a program called CUDA. And that's effectively locked the developers who are programming chips into NVIDIA's technology. By not owning any manufacturing plants, the company has a very efficient financial model. This earns them very high returns, making it also very cash generative. The company's leadership is incredibly innovative. They're very forward-looking, and their culture has always been one of, if we don't make the next move, our competitors will. And so they've always reinvested heavily into the business and remained at the forefront of the next wave of GPU technology. As I said, in the 1990s, NVIDIA essentially invented the GPU, and that's today reshaped the computing industry. Their current flagship product, the H100, is the gold standard for AI computing. Recently, at an industry event, NVIDIA released what will be the next generation of their GPU chips. That will be the Grace Blackwell 200. That super chip will be 6 times faster than the H100. These chips come at an enormous price tag of about $30,000 per chip, and that's at a gross margin of 90%. Some of their competitors have chips that are in some tests comparable, but when we're thinking about these chips, and you need to consider the total cost of ownership, because if your chip is faster, it means it's more efficient, which means that it consumes less electricity, and often that becomes the consumption of the electricity and the hours used by programmers to program these chips is actually a greater cost of ownership than buying the chip itself. TSMC, being at the leading edge of chip design, chip manufacturing, has customized its 4-nanometer process specifically for NVIDIA, and that means that if the world's leading manufacturing company is customizing an entire manufacturing process for your hardware, it would be very difficult for any competitors to optimize or outmaneuver you by creating a better piece of hardware when they've got to piggyback off of the manufacturing processes that were designed for your chip. And if we're looking at the total addressable market for a company like NVIDIA, it really is incredible. As I said before, $1 trillion of data center infrastructure has been invested in the last 10 years, and much of this will need to be replaced in the next few years as the world shifts to accelerated computing. That at least is the belief of Jensen Huang. Jensen, the CEO of NVIDIA, foresaw the AI revolution and began investing in it in 2011, years ahead of any of their competitors. Lisa Su, the CEO of AMD, one of NVIDIA's competitors, believes that the total addressable market for AI computing will be $400 billion a year by 2027. And improving productivity stimulates more demand, not less. That's the one important thing to think about when we're thinking about AI. All the advances that technology has given to us over the last 150 years since the dawn of the Industrial Revolution hasn't resulted in people doing less. All of them has resulted in greater productivity and people doing more with the additional resources that were freed up. This creates what some people think might be the golden age of AI, where AI will result in a growth boom and that will spur on additional demand for more technology. Some of the examples of industries that could be spurred on by this are software and AI factories, which is basically where you take a traditionally analog process like manufacturing plants for motor vehicles, and then you essentially digitize as much of that process as you can and put it and use AI to drive as much of the manufacturing process. The robotics and pharmaceutical industries are set to benefit massively from the adoption of AI, and then autonomous driving, as we've spoken about, but also logistics and then enterprise IT. And then continuous innovation for NVIDIA will drive further growth. They really are at the cutting edge and a step ahead of their competitors. Whenever a competitor has come out with a product, they've generally been able to meet and far surpass that technology in their next generation. In summary, we really do like the semiconductor industry. High quality businesses tend to remain high quality even during periods of technological change or rapid innovation. We should be invested in semiconductors over the long term because it's the industry that's powering the AI paradigm shift. This has big implications for important industries such as the automotive industry and healthcare. For large established companies that can benefit from its capabilities, artificial intelligence and accelerated computing in many ways will sustain innovation and not necessarily disrupt these companies. So I'd like to thank you for your time today and for listening to us speak about semiconductors and for showing some interest in the industry. It's a really exciting space, and we hope that it's been beneficial and informative to you. Thank you.